This video is about long-term trading in the futures market. The agricultural markets are an excellent place to look for long-term trades. If you can stick with them, that's the hard part, sticking with it. You can make a lot of money if you do it right. First I'll point out this is a wheat contract, a weekly wheat contract going back to 2004. The red line right here, this is a resistance point. Can't break above that, falls back down. Stays down, goes into a trading range, comes back up, tries it again, can't do it, falls back down, and then goes out and breaks out here in the fall of 2006. Goes up for a while and comes back down. Can't keep going up, so it falls back down. Makes a support line right here. Here's another resistance line. If you're going to be a trader, you have to learn about support and resistance lines. We'll point out that on my blog, it's at www.myfuturesblog.com. There's a free trading book there for trading price patterns that covers support, resistance, long-term trading, short-term trading, how to make a trading plan. It's a must-have, really. It's free. Pick it up. It's at myfuturesblog.com. One thing I'll point out while I've got you here, I was a pattern trader. I like the 1, 2, 3s, flags, triangles, that sort of thing. And here's my favorite of all, the 1, 2, 3. Here's a 1 point, a 2 point, a 3 point. Now this is a weekly chart, remember. Here's the entry point. When it breaks above that, you want to be in. You got support for your indicators to back this 1, 2, 3 up here. Goes over here and breaks out. Look at that run up. That's a $4,000 run right there. Suppose you had 2 contracts, 3. What about 5 contracts? I'm going to go over the specs real quick for you here. Show you. Current margins around $1,200 or so. That's not a difficult one to get in. They do have many contracts on this. You might want to consider them also. Okay, I'm going to bring in the specs for this trade. Okay, these are the specs for the wheat contract. The corn contracts, soybean, are pretty much the same thing. 1 cent will equal $50. It's easy to get. There's 753 pennies. Take away 752. That's 1 penny there. 1 cent, $50. Minimum price fluctuation, that's the least a price movement can make in the ags. Wheat, corn, soybeans is 1/4 of a penny, and that equals $12.50. 4 times $12.50 gives you 1 penny, gives you $50. Really heavy math here, isn't it? Okay. Current margin for wheat is about $1,250. Some brokers may charge a little bit more. It really depends on them, but that's the standard set by Chicago Board. A $1 move, that's 100 pennies times $50 for a penny. That makes that a $5,000 move. That's pretty good. Trading contracts are March, May, July, September, December. These symbols on the side here, H equals for the March contract. It would read, depending on the charting program, WH8 for current March. K is May, N equals July, U is for September, and Z, December. There are other factors that come into trade. Open interest, that's a fun one to figure out. That's covered in my book, by the way. You can get that at myfuturesblog.com. And volume. You got to have volume to be able to get in and out. Many contracts, light volume there, but you plan long term, you can get in and out. But it has to be long term. There's no quick in and out on a mini contract. Okay, I'm going to go back to the chart and I'll finish this up there. Okay, here's the weekly chart again. Here's my favorite, the MACD. I like this one here. It's taken off in fine style. Now you can pull out up here, by the way, and you can short it if you want, or just back off and wait for another move. And as you can tell right here again, this momentum, 14 period moving on the weekly now. It would be different on a daily. This is starting to go up before the price is. Look at my favorite here. 1, 2, 3. Bang. You're in again at about 5 1/4. That is remarkable. And you're taking off. One contract, 20,000. Suppose you had 2 contracts. How about 3 contracts? Can this be done? It's done every day. If you wait for these moves, you can make your trading life. They're really good. You find these in corn, soybeans, wheat. The margin is quite manageable. It doesn't take a fortune. It'll hold these drawdowns here. There's a little bit of a one here. Less than $100 drawdown. It'd have made that okay. You would have had a really good trade working for you. You'll find the same thing in the corn. Again, you don't have to be in every trade. Pick the good ones. Bide your time. Let things work for you, not you it. This is a business, remember. Treat it like a business. Know where your support and resistance lines are. This is a resistant line here because it's going up. When it breaks it, it turns back into a support line. Bounces off that and away it goes. Here you got here another resistance line forming up here. Here's the support line. It all interplays. Keep this in mind. And again, plan your trade and then trade your plan. Treat it like a business. You can find all this stuff out at myfuturesblog.com. I hope to see you there. Till the next time, this is Dick Toller. Good trading to all.